Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 3rd. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about option strategies I'm implementing into my portfolio based on those assumptions I come up with. And we have webinars where over my 25 years of experience, I have streamlined that process for you folks to find the right strategy for your given assumption. So we aren't just picking option strategies out of the hat. What we do is we look at what's going on at this underlying and find the best strategy for what's going on around those options premiums that we're looking at in the platform. All right, so without further ado, let's get on with the economic data because we've got a lot to go over today. We've got the PMI numbers coming out from across the pond, mostly service PMIs here, so Italian, Spanish, French, German, and the broader European region, all coming in below 50. Now, they were expected to come in below 50. A few of them beat on the headline numbers. Nobody really missed. But again, anything with these PMI numbers above 50 is expansion, below 50 is contraction, and we're still in contraction mode on the service sector in the European region. Now, moving back over here to the United States, we got the ADP non-farm payroll change. Well, that's the precursor to Friday's big non-farm payroll number that we're really going to look at, but this gives us a little bit of insight sometimes as to what that number is. It used to be just thrown out the window because it was so off. It's getting a little bit better as of recently, but the ADP non-farm payroll change coming in at 117,000 hires, expected though to be 200,000 hires. They did revise last month's numbers up, albeit slightly from 174 to 195. So that is good to see 20,000 helping that headline number miss. That we saw missed by almost 86,000 there. Finally, or a couple other things, we got the ISM Services PMI, Purchasing Managers Index, coming in at 55, expected to be 58. Crude oil inventories, boom! Here we go. Look at crude oil rallying $1.79 off of a 21 million barrel build. Yes, 21.6 million barrel build expected to be a drawdown, or 21.6 million barrel build expected to be a drawdown of 1.3 million barrels. That is a miss by basically 23 million barrels, people. 23 million barrels. So, but the one thing we did see is there was gasoline drawdown. Was the biggest drawdown we've seen since 1990, and off the top of my head, I can't remember what it was right offhand, but it is the biggest drawdown for gasoline since 1990, so over 30 years. That's probably what's given us a little bit of a lift here in the markets, but we also have the OPEC Plus meeting happening right now, and they're actually talking about ramping up production a little bit. Saudi Arabia is supposed to be cutting back, but we'll have to see if they stick with that. But all of those things are what's going on in and around crude oil right now. Then we got Bitcoin moving higher today with gold coming off. And gold actually this morning looking like we had that continuation pattern. Remember, we talked about it. Anytime you get those counter-opposing dojis that both look like they would be bottoming patterns or topping patterns if they were at the top of a move, but now we're seeing them at the bottom of this move, that would be considered a continuation pattern. So with that being said, a settlement below yesterday's wick would be very bearish and look like we are going to lose that 17 handle and look to test 1650 in gold futures. So keep your eyes out that. I think that 1700 will be heavily defended, but a settlement lower will really signal we're getting outside of that value area, and the market will extend that significantly, usually on the downside. Bonds down a point. Nothing to see there. Hopefully you've got your refinancing done. VIX is moving higher. We've got a mixed bag here in the Dow Jones Industrial Average, up 80 points here. We've got the NASDAQ down 165. That's what I'm talking about. We continue to see this rotation. Now it's seeming like the real thing to go for right now is the reopening trade. We're seeing a lot of those stocks, the tech and many other stocks, really see some weakness that had that rally during the close of the economy. Now that we're seeing this reopening, we're seeing a lot of like casinos, hotels, cruise line ships making highs, while the rest of those ones that were making the runs are seeing a little bit of weakness. I mean, all the way down to even like Tesla is well off that 19 or 900 handle that we were seeing before. It's down into the 600 handle. All right, E-mini S&Ps are also off by about 11, but that's pretty quiet for the E-mini S&Ps. You can see overnight is a bit short, but I would have to say that a pushback up into yesterday's value area low would be a signal that the entire short of the overnight session was flushed out at this point. But we can see that a lot of weakness coming into today, despite the fact that the big, massive drawdown on gasoline, which, shows demand at this point. I mean, I don't think that we had enough refineries shutting down during the cold streak and being able to increase inventories that much would be the real catalyst for the drawdown in gasoline. It really begets to demand. And with that being said, I have flipped through the charts a couple of times today looking for anything. I'm tired of sitting on my hands. I feel like I want to get something done here, but things like Tesla are not working to the upside. Chipotle falling out of bed today. Not falling out of bed, but it's just falling from graces there. And then we look at stuff like WYNN, Love, and things of that nature. And you can see, yeah, they are slightly negative in some regards with some of these. But at the end of the day, you can see they are still strong comparative to things like what we're seeing in the tech sector that has fallen off those highs that we were seeing before. All right, so continue to see this mosh pit of the markets. Oh, another thing I wanted to mention later on today is the beige book. The beige book is the precursor to the blue book. The blue book is what the Fed gets in 2 weeks during the FOMC meeting. It is just an updated beige book, folks. So if you really want to see what the Fed governors are looking at to make their decision on the economy, that is one of the big ones that they are going to be looking at. So we get a glimpse at that with the beige book later on today. So starting tomorrow, we're inside that 2 weeks of where these Fed governors will stop speaking, but we have a couple of them speaking today as of yet anyway. All right, so that's all I've got. Please take a moment to go over our disclaimer. You guys know the drill here. We're an educational company, and that's all I got for you folks. If you can't take that, take it easy.